Welcome back to part 2 of BFX beginners class section. I believe everyone that has access to this video must have undergo the FX training, which has to do with your the apps and the rest of other things you need to set up for your trading. So now let's dive into the major reason why we're here. Okay, important information. This training would be divided into different batch and different sections. All right. So now let's dive into section 1. So now this is batch 1, and it's divided into different sections which range to about 5 sections. Okay, so now let's start with the section 1, which has to do with defining what forex is. What is forex? Understanding the foreign exchange markets. All right, let's dive into it quickly. For forex, the short form is also known as forex exchange. It's a global marketplace where currency are traded. It is the most liquid and largest market in the world, with over 7 trillion traded daily. Imagine you travel from Nigeria to the UK. You eventually have to locate an exchange vendor and exchange naira for pounds. That simple act is forex in action. Now imagine thousands of bank, companies and traders doing this 24 hours a day. That's the forex market. Okay, so now you don't buy currency like a product. You buy and sell currency pairs, one currency against another. For example, euro USD means you're trading the euro against the US dollar. This market operates 24 hours a day, 5 days a week, meaning you have to trade from Monday, Tuesday, Wednesday, Thursday, Friday. Most people trade Saturday, Sunday, which will be explained deeper as the class continues. It is divided into global trading sections, which is the London, the New York, Tokyo, and Sydney. The market never sleeps because somewhere in the world, money is always exchanged. So now, this is a graphical representation of world map showing trading sections in different areas of the world. So now, the first one, we have the New York section, we have the London, we have the Tokyo, we have the Sydney, and more. Okay, and this other picture here is a graphical representation of currency pairs, euro and US dollar. This is how they look, euro and US dollar. Now they're showing you the quote currency and the base currency. Okay, so now you see that euro USD, the base currency is the euro, and the USD is the quote currency. Okay, USD, euro USD, the euro is the base, while the USD is the quote currency. So take note of that, very important. Now this other picture here shows us a simple animation showing a traveler exchanging currency. You understand? So now you come with your US dollar, like in this picture now the person has US dollar. I want to exchange it for your euro. So now you guys do the exchange and the swap. So that simple art is just what forex is all about. So now let's dive into the second section of this training, of this batch rather. So now we have to dive into the history of forex trading, evolution from gold standard to online trading. To understand where we are in forex today, it helps to look at where we came from. It helps to look at where we came from. Now, in the 1944, most countries used the gold standard, meaning their currency was backed by gold, meaning they don't have this our currency we are using now, like naira, dollars, pounds, yen. They were not using any of those things back then in the 1940s. Still in the 1940s, and Bretton Woods system introduced fixed exchange rates tied to the US dollar, which was backed by gold. Meaning in that same era they were still using gold for exchange. Okay, now down to the 1971, the US abandoned the gold standard, leading to floating exchange rates. Now, from the 1980s to the 1990s, bank and institution dominated forex, trading billions behind closed doors. Now, to this era in the 2000s, with the rise of internet, online brokers gave retail traders access to forex markets with as little as $100. Today, anyone with a phone and internet can trade currencies. That's a revolution. That's a revolution in the financial in the financial world. Okay. Now, this is a visual representation of everything that was explained in this section 2. So now you just take your time to go through it. It's very easy. You see how the currency, was the currency was increasing in its was increasing rather from the 1990s, from 1492 to this is our current era now, so just take your time to go through it. This is just a video. I will drop the PDF in the server there so you can equally go through it too. So now these are an old trading floor. This other diagram here simply shows us an old trading floor versus modern trading platforms. Okay, that's the evolution of trading system in algo trading and trading to algo trading. Okay, so this is the ancient era. We have the this in the old era. We have the 7th centuries. We have the currency system. Everything is explained down here in this diagram. Okay, now this is where we are now, the picture of gold bars and early currency exchange. Okay, so now just take your time to go through this picture. I won't really give more details in it here in this picture, so you just take your time to go through it. Any question you need, you just send it in the server there and I'll attend to you as quickly as we can. Okay, so now let's dive into the third sections of this batch one. Now in this section we are going to be talking about why you have to trade forex, benefits, risks, and accessibility. Why is forex so attractive to millions around the world? That's the questions newbies and most times advanced trader asks. Okay, now the benefits. So now I'll be listing out some benefits of forex trading. Now, high liquidity is easy to enter and exit trade. 24-hour markets, meaning trade at your convenience, day or night, meaning that you can access the financial market anytime, any day. Okay, so now they have low entry barrier. You can start trading with as little as $10 to $100. Now you can leverage. Small capital can control a large portion. That's your leverage. We have different sizes of leverage and also have the unlimited leverage, meaning you can use a $10 account to trade, to hold positions that a $100 account can hold. So now the next one, we have global opportunities. Currency movement is constant, endless trading potential. Okay, the risks, high volatility, great for profits, but risky for unprepared traders. Which we are going to break everything down for you to be prepared, so you're going to avoid your high risks. Okay, so now the leverage can hurt. It amplifies both wins and losses. Okay, scams and fake brokers. The openness of the market also attract fraud. In conclusion, Forex is a very powerful tool, but like any tool, it depends on how you use it. That is why education is your greatest investment. So now, in this slide, I'm just trying to, encourage you guys and tell you about the risks and the opportunities you can get from trading the financial market. Okay. So now, in this batch one, the section, let's dive into the section 4. How the forex market works, currency pairs, quotes, and pricing. Okay. So now, in this section, I'm going to be identifying the currency pairs, their quote currency, their base, and their pricing. Okay, so now currencies are traded in pairs such as US GPY, meaning the US, what their currency they use is dollars, and their JPY Japanese, their currency they use is yen, or Great Britain, that GBP and USD. Okay, Great Britain, their currency they use there is pounds, and USD, US they also use dollar. So now you're buying one and selling the other. Now I give an example here, so take your time to go through it, but let me just read it out for you. The euro against the USD, it equals to 1.1200, means 1 euro equals 1.12 US dollar. I come again, euro against USD, and they give us a figure there which is 1.1200. Now what this thing simply means is you're trading 1 euros for 1.2 US dollars. If the pricing rises to 1.1250, the euro has strengthened more against the dollar. Okay, so now just take your time to go through this. I know this is a little bit complicated, so go through it. Drop your questions in the comment section in the beginners channel category right there, and my workers or I myself will attend to you. So now the next one we are going to be talking about is the currency pairs type. We have the major currency, we have the minor currency, we have the exotic currency. Okay, so now let's start with the major currency. The major currency involves US dollar and other strong currency, example euro USD. Okay, so now I'm going to be giving you, I think in most of the batch I'll be explaining the time frames where you have to trade most of these strong currencies. Okay, so now let's dive into the next one. We have minor currencies, do not include USD. The minor currency do not include USD but involve strong currencies, okay, like the euro, and the Great Britain. That you're mixing a strong currency with a weak currency. Okay, so now we have exotic currencies. Involves a major The exotic involves a major currency and a developing country's currency. Example: USD against Nigeria. So US is a developed country and Nigeria we are still developing. Okay, so now you're trading a higher currency with a lower currency. Okay, so that's just what this thing is. So now we have the ax bid prices. Okay, the price broker pays you to sell a currency. So now in every transaction you make in your broker, the broker pays you to sell a currency. Now the ax price broker asks you to buy the currency at. So now the transaction you're making, this is how brokers they make their own money from, and they also have what they call spread. That's the difference between ask and bid. Okay, the life quotes. Now this picture now, this explanation of how a pair work with arrow diagram. Okay, this is what a pair like your candlestick looks like in the market. This is a graphical representation of candlestick. Now the green one represents the bulls, that's the buys. Okay, and the red candlestick also represents the bears, that's the sellers in the market. So just take note of that. That's very simple. Looking at introduction of currency pairs. Now this is a diagram that differentiates major pairs from base pairs. That's the quotes and the the minor and the major, exotic, and all those things that was explained in this section 4. So now all these pictures now will help you understand them. So when you open your MT4 or your trading view, you know exactly what you're looking at. Okay, so let's dive into the next section. Now this is section 5, and now in this section 5 we'll be talking about major forex participants. So now the major forex participants are the banks, institution, individuals. Who really moves the market? That's a question that a lot of beginners ask. Who really moves this market? Is it individuals? Is it institutions like banks and the rest of that? So now I'm going to be explaining everything here in detail. Remember, I'm also going to drop the PDF there in the group so you have access to it. Okay, so now let's dive into it. The first one, who really moves the market? The first set of people that actually moves the forex market is the central banks. Okay, now this bank control interest rates and money supplies. Okay, for example, the US Federal Reserve, FED, or the European Central Bank, ECB, okay, can move the market just by speaking. That's why I see a whole lot of traders now wait for news that US gives and the European, because those news now moves the market. They don't necessarily need to do any major thing. All they just need to do just come online and they just make a statement and it moves the market majorly. Okay, so now I'll be explaining how we trade news in other batches of this section in this class. Okay, so now let's dive into the second set of things that moves this financial market. Okay, the commercial banks and institutions. Okay, these commercial banks and institutions moves billions daily for clients, government, and corporations. Okay, that's to tell you that you're not just the only one trading the financial market. There are thousands of people, thousands of institutions that trade in market. So imagine half of, let's say, the population in Nigeria now, and we have, like, let's say 1,000 banks. Okay, and 900 of them are trading in financial markets. That's a massive move. Okay, so now they can move the market to their own. They can move the market the way they want. Okay, so that's why it's good to learn how to trade with these people when they are entering the market, when they are going out of the market. That is one of the reasons why you subscribe for this class, and we'll be breaking everything down into different sections. So just move along with us. So now the next set of people that actually move the market is our corporations. Okay, multinational companies convert profits from overseas. Okay, a Nigerian company earning in US dollar might need to convert to naira, affecting demand and supplies. Okay, now this also is a strategy on its own, which I'll be explaining to you later on in this class. But now you need to understand that the more we exchange currencies, foreign currencies, yeah, it also affects, okay, it also moves the financial market. So it's just a simple understanding. So now the fourth one of what really moves these markets, they are called the hedge funds and investment firms. These guys speculate, they trade currencies to make profits, often with massive capital. These guys now, there are people that can trade with like $100,000. They can trade with about, huge amounts of money in the financial market. Okay. So now the fifth set of people that that move this market are called the retail traders, which is you, me. We are called retail traders. Okay, the smallest fish in the pond, but growing rapidly. Meaning we are this kind of people that come to the market and deposit $10 and try to grow the account. They call us retail traders because we don't have much capital to trade in the financial markets. Now picture a river, and you're going there with a spoon, okay, to fill up a cup. Now picture it and say, that's why they say trillions of dollars are being traded every day. But we, the retail traders, we don't have the capital to leverage on that kind of money. Okay, that's why we are called retail traders. Now, the smallest fish in the pond, but growing rapidly. With your phone, a broker account, and a trading platform, you can trade just like the big guys. So now I dropped the pyramid showing market participants from largest bank to smallest retail icon for each participant type. Okay, so now just go through this, and that is it for this particular section. Okay, that is it for this particular section. I'll be expecting a lot of questions from this slide. So if you have your questions, like I said, do well to drop your questions in the channel meant for questions in the server there, and we will attend to you immediately. Just questions concerning this particular slide. Thank you very much.